Hey everyone, for episode 42 of the Rental Roundtable, we had on Dan Conway, managing partner at Craft Partners. If you've ever thought about selling your independent rental company, this is the episode for you. Dan has done over 30 transactions in the last 15 years, all in the equipment rental space, totaling over $2 billion in enterprise value. We walked through what that process looks like, all the way from when you first think about selling, all the way through that iconic moment when you have that sale and how emotional that can be, and talked about what that journey is like. We talked about some of the good reasons to sell and some of the bad reasons to sell, including trying to time the market, which doesn't always work. So if you've thought about selling your business or want to understand what that journey looks like, this would be a great episode for you to listen to. Hope you enjoy. All right, everyone, welcome to the Rental Roundtable, episode number 42. Got my friend Dan Conway on, managing partner at Craft Partners. Dan, welcome to the show.
Thank you, Kyle, and thank you for having me.
Yeah, well, I got a fellow Maryland person on. I grew up in Maryland, Furna Park High School. You're on the Eastern Shore, so it's good to have you're not the first Maryland resident to be on the show, but I love talking to people from Maryland. Crab cakes and football is what Maryland does, and I guess equipment rental as well.
It's a great part of the country, and I really love living here. Yeah.
Did you grow up in Maryland, or where are you from initially?
Yeah, I grew up in a small town in Maryland. I went to school in the Midwest. I went to Notre Dame. I was an accounting major there. So when I graduated, I kind of had to go somewhere, and I interviewed with all the big accounting firms back then, and I had one very compelling job offer with one of the big accounting firms, but they needed people in Los Angeles. So I packed up and moved to Los Angeles in 1988, and ended up spending the next 30 years there. And it wasn't until about 4 years ago that I moved back home to the Eastern Shore of Maryland.
Well, good to be back home, I'm sure. The brackish water of the Chesapeake Bay, that's home to me. I go up probably 3-4 times a year to visit family. I love being up there. Obviously, I'm in Atlanta now, so no water around us. So I get the seafood when I can when I'm up there. Well, I'd love to jump in for today's topic. Obviously, you've worked on a lot of M&A, particularly in the equipment rental industry, right? You've done over $2 billion of deals over the last 15 years, over 30 deals, 16 deals, I believe, directly with Sunbelt. So we're going to talk a lot about M&A, working with independent rental companies, selling to a national, selling to maybe private equity. We're going to kind of dive into that. So before we jump into the nuts and bolts of selling your company, I'd love to just sort of hear your background a little bit further, really how you got into equipment rental, and tell me more about what you're doing with Craft Partners today.
Sure. I'll go back a little bit. So like I said, I kind of started my career as a CPA working for one of the big accounting firms. I did that for 3 or 4 years, and then I went into commercial banking, spent the next 13 years in commercial banking. And it was there I really got introduced to M&A, mergers and acquisitions. I spent a lot of those 13 years doing financings for acquisitions. A lot of private equity groups, whenever they buy a company, for example, they put a lot of senior debt on it. I was doing those kind of transactions. And, over the course of those 14 years, I went through 4 different bank mergers. And after bank merger number 4, I kind of had enough of that. And I joined what was then a startup investment banking firm in Los Angeles called Focal Point Partners. And a lot of the viewers can relate, but, it was a very heady time. It walked away from a salary and paid vacation and benefits and all the other stuff. And it was just, eat what you kill type environment. And, we just made up our minds that whatever we touched, we were going to just try to overachieve. And so we just put our heads down and worked our butts off on every single deal. And we ended up doing extremely well with this startup investment banking firm, and I ended up spending about a decade there. And it was during that period that I discovered what I've come to love as the equipment rental industry. I met a gentleman who was one of the original consolidators in the space back in the 1980s. And what I saw was a large industry that was very fragmented. There wasn't a lot of private equity in it, which for me was good. And it was consolidating rapidly behind, all the majors. So we did a little bit of marketing and ended up getting signed up on a single location aerial company in 2007. We ran a process and had a nice bidding war going between what was then RSC and Hertz. Ended up selling the company to Hertz. That deal led to another one and another one and another one. And by the way, the owner of that company is still one of my best friends today. In fact, he was in my wedding 2 years ago. So I just Did a number of deals when I was at my previous firm. Started doing more and more focusing on just the industry. And about 11 years ago, I decided to branch off on my own, just to focus exclusively on the equipment rental industry. And it's just been a fantastic ride. I just really love what I do. I love the industry, and I'm kind of just a one-man shop, but I've really grown to love it and the people in it.
Was your first exposure to the rental industry, you said in the 80s? Did I hear you right?
Well, the first transaction I did in the industry was 2007. In fact, I think it was early 2008. It was right before the financial crisis.
Okay,
So
2008.
the timing was good, and hence, my good buddy. So but the industry is as big as it is, 60 billion. It's still pretty small in many ways, and that the industry is tight enough that if you do a good job and you go about your job in an honest way and work hard for your clients and work in a transparent way, word gets around, and that's really been the basis of our success at Craft Partners. We just try to do the right thing. We do it with great enthusiasm and integrity. And if you do that and you do a good job and your clients are happy, that would inevitably will lead to the next deal and the next one. So fast forward to today, I think I've done 30-something transactions in the industry, something like that.
Yeah, and many of those I imagine coming through referrals and word of mouth, right? You've done a good job for someone selling their company, they refer you to the next one. Is that right?
Yes, that's exactly right.
Yeah, and I talked to a guy, our previous guest yesterday, Jay Tyrell, at Northern Safety in Minnesota. He does safety training on site for rental companies, and he started his company a couple years ago. Still does not have a website. Doesn't market. Doesn't have a website. It's all word of mouth. He does a good job, right? And he's doing a good job. And I sort of love that. I'm like, he's like, yeah, I need to get a website. I'm like, I don't know if you do. Like, you're sort of taking the alternate approach. Like, if you do a good job, your customers will do the selling for you, which I thought was cool. It sort of validates what you're talking about. Like, if you do a great job in this industry and you work hard with integrity, your business results will take care of themselves. People really respect that in this industry. That's something I feel like I've learned in the last 5 years here as well.
Absolutely true. I mean, to be successful in this industry, you need these old fashioned values. You got to get up early, you got to work hard, you got to do what you say you're going to do. You got to treat people right. You got to bend over backwards for your customers. These are the people that kind of rise to the top and grow successful equipment rental companies. And that's part of why I just love this industry, is because of the people. That they're just fantastic characters and people, and many of them become good friends.
Yeah, I agree with that. One thing that's interesting from your view, right? You sort of sit across, the national players who are buying a lot of independents, but also you work with independents, so you could kind of see the bridge between United and Sunbelt and the 1, 5, 10 location group independently owned. What makes it so that, I guess maybe asked differently, what's the difference between an average or a good independent rental company and the great ones that are growing and potentially getting acquired? What makes those certain companies so valuable and market leaders versus maybe an average one who's sort of getting by?
Well, that's a really good question. I'm not sure there's a really easy answer to that. Good rental companies have, bigger is always better in my world. Talk to buyers, and I'm putting together the information memorandums. I'm always putting my client's best foot forward, whatever that might be. Whether it's the location, it's the size of the fleet, the age of the fleet. Some important metrics are, the EBITDA and the EBITDA percentage. The dollar utilization, the weighted average age of the fleet, the number of locations, and of course the quality of the people. So all these factors go into, what makes a successful company a successful sale. It doesn't mean it always works, because at the end of the day, there are a limited number of buyers in the industry. So buyers have to be patient. It might not be the right time for United or Sunbelt in this particular location, but a year or two from now, things change. And I've had clients before for like 3 years. Sometimes you have to be patient and wait for the right time in place.
Yeah, that's a good point. I want to talk about the metrics that we'll talk about how to value business in a second. But before that, I'd love to hear your perspective of the M&A market 2025. Here we are, February 19th, 2025. If we talked last week, we'd be talking about United buying H&E. Now we're talking about Herc buying H&E, and there's some changes happening in the market. Tell me about the outlook 2025. Are there more acquisitions happening, less? What's your view of what's happening on the M&A side of the rental industry?
Things have definitely slowed down this year and even last year. There was a flurry of activity coming out of COVID, and Wall Street was really reporting growth, and the Sunbelts of the world, Uniteds, were making acquisitions. Like, I think I did 6 transactions in 2022, almost an equal number in 2023. So those are 2 tremendous years. About March of last year, I started to see a slowdown in M&A, and I think that largely had to do with the rise in interest rates. It disproportionately impacts, middle market contractors and that sort of thing. So, we saw the Sunbelts of the world and the Uniteds kind of pull back on the number of transactions that they did, last year. And I've seen that continue into this year as well. They're being much more selective this year. But that will change. I've been doing this for a while now, and, we live in a cyclical industry. The consolidation is going to continue. I think it's just a matter of time before the majors start to get more aggressive. So,
well, and what's the view? Let's flash forward 10 years, 15 years from now. Is there a middle market? Is there a room for the independents, or the nationals just buy everyone and take over? Like, what's your view of long term, maybe 10, 20 years out? Like, what's the role of an independent rental company in this market?
I think there will always be independents in this industry. And the reason is because the independents can provide a higher level of service than the majors. If they're inclined to work hard and do those things I talked about earlier. One of the things I loved about this industry is it's very democratic. If you can put together a business and serve the customer extremely well, you can go head to head with United and Sunbelt and all these other guys. You may not be as successful with some of the large national accounts, but there's always going to be room for independence, and I'm extremely bullish on the industry in the long term. I think the industry's gotten better delivering value to the customers, but with the technology and the equipment and the maintenance and all the other things that go together to provide service. So the industry is just going to continue to grow. I'm convinced of it. It's going to continue to consolidate, and at the same time, there's always going to be room for independence. I see it even today. People that, started a business 2 years ago, next to nothing, are doing extremely well, even this in tough environment today. So there's definitely opportunity for independence, and there always will be.
That's my view too. I think there's like a view that United and Sunbelt own 100% of the market one day, and I don't agree with that. I just personally don't. I mean, you talked to I think you listened to the episode with Brian Peters from Advanced Track, right? From December. I think that's how we initially got connected, and he started 4 years ago, and he's crushing it, right? And okay, why is he successful? He's honest. He works hard. He treats the customer well. He's patient. He's disciplined. In some sense, it's not rocket surgery. It's like, just do the basics well, consistently over a long period of time. Like, you will be successful in this industry. And I think that's one example of many groups that you know, and I probably know as well. Like, there's no shortcuts here, but if you do the work, you can have a great business, right? And I think that's been really cool to see in this industry.
Yeah, I listened to that podcast. I thought it was excellent. I love those inspiring stories. I've seen them throughout my career in this industry, and it's very inspiring. And the hardest thing is, the industry is just so darn capital intensive. It's difficult to kind of get started, and you really kind of got to just slug your way through it. Every day's a fist fight. But over time, the wind is going to shift from your face to your back, and then you can really, really do well.
Yeah, and I don't know when that takes. And maybe it's 3 years in or 5 years in, but we see these groups a little bit earlier than you, right? Because they're like growing and they need a rental software. So we talk to them, and then they grow up, and then one day they reach out to you to sell a company. So we're seeing the early days. Like, Brian Peters is a guy that maybe 5-10 years out, right? You're working with him to sell the business, right? But we saw him at day zero. So it's really cool to see how they get started. Not all of them work. It's like any starting a business, like, as you know, like, they don't always work, but when they do work, it's really cool to be part of that and see that magic. It's just like a really, really fun thing. And part of the industry, like, I don't know if you're at the ARA show, but they were saying the industry is $60 billion in 2021, saying this year could get to $83 billion, right? Because construction is growing, but also rental penetration keeps going up 1% every year. I think it's at 60% now. But if you look at Europe and Asia, it's 85% rental penetration, right? So I think there's a lot of tailwinds behind the industry, which is exciting to be part of, because I still think the best days of rental are still ahead for the entire industry.
I totally agree that the industry's been growing faster than GDP for a couple of decades, and I see no reason why that's not going to continue.
For sure. I want to talk briefly about the H&E news, just because it happens. It's happening in real time. Was that surprising to you? I'm curious, like, what's your view of that? If you want to comment on that at all.
Yeah, I would say it was surprising to me. The United Rentals deal was surprising to me. Not so much that they did it, but the premium that they paid, I thought was enormous. It was more than 100% premium to the then trading stock price. But of course, United can do that because there's a lot of synergies and that sort of thing involved. I was even more surprised to see Herc come over the top and overbid United's bid. Because they paid even more of a premium. I think by my calculations, it was like 7.7 times EBITDA, trailing EBITDA, or about 7.5 times 2025 estimated EBITDA. But more than that, Herc has done, maybe 20 acquisitions over the last 3 or 4 years. Most of them have been very, very small. This is obviously a different deal. H&E is a big company. So I think, Herc has a challenge in making this work. So, time will tell, if they're able to kind of make the returns they need to make. But to me, I think my takeaway in all of this is that, the United Rentals of the world, the Hercs, are looking over the horizon 3 to 5 years out. And I think they see tremendous growth in the industry like we've been talking about. So, I maybe that what Herc is paying is worth it, but time will tell. I would not bet. Larry Silber, the CEO of Herc, I would not bet against that man. He's delivered tremendous returns for his shareholders. I think something like over 500% return since they spun off from Herc in 2016. So Larry's a great operator, but he's got a big challenge ahead to kind of make this deal work for his shareholders.
Yeah, I mean, I was definitely surprised. I got a few texts about it yesterday morning and went on LinkedIn, and everybody's talking about it. I'm not educated enough to say if it was a good decision or not. It was an expensive decision, but I do appreciate people acting with conviction. If you believe this market's growing and you have this one opportunity, but there's not 1,000 H&Es out there, right? You get one shot, especially if you're going head to head with United on a regular basis. I don't know. I sort of like when people act bold. It doesn't always work out, but I appreciate people go for it. So
they went for it. I give them credit because, it's not easy to make these tough decisions and they're risky, right? Because, nobody has a crystal ball. I certainly don't. But again, my takeaway is that, Herc and United they're bullish on the industry long term. And I take great comfort in that. And I think everybody in the industry should take comfort in that as well.
Yeah. And that's my gut feeling too, is there's, I don't know what's going to happen in the month to month, year to year, but if you take the long 5, 10 year view, 15, 20 year, this industry is just getting started, I think. But we'll see. It's an exciting time to kind of be part of it. I want to talk a little bit about we'll talk about the metrics here in a second, but before I decide to sell, I'm a rental company. I've been running this 10, 20 years. Maybe my grandfather started it. So it's been the business in our family 70 years. Like, how do I start to think about, should I sell or not? That question of when do I get out? Do I keep running the business? Do I have liquidity? How do I think about the good reasons to sell and some of the bad reasons to sell?
Right. Well, that's a really good question. That's one of the first things I'll ask a prospective client is, why are you selling? And, my advice is always, you should always have a good reason to sell. And the reason why I say that is because at the end of the day, to make a deal happen, it's going to have to be a good deal for the buyer and the seller. So it's difficult to for me to get a deal that's going to be better than just keep it in the family for the next 10 or 15 years. So I tell my clients, have a good reason to sell. And there's lots of good reasons. And the most common reason that I hear is, look, Dan, I've been doing this for 25, 30 years, and I'm just getting tired. It's difficult running this business. People are nipping at my heels, customers, employees, vendors, service providers. And I'm just a little bit worn out. And I think that's a good reason to sell. But trying to time the market or, things like that, or just, or maybe, they want to just do something else. I mean, also a good reason. But to try to time the market is very, very difficult. I think, again, have a good reason to sell. And then, if you do decide to proceed, go about it in a serious way and in a professional way.
So you're saying some of the good reasons to sell, mostly because you want to personally be out of the business, for whatever reason. You want to go do something else. You want to go open a coffee shop, or you want to retire because you've been doing this 30 years. Like when you personally don't feel like your heart's in it, those are good reasons to sell. Bad reasons to sell are saying, hey, I saw H&E got this multiple. Let me go get my own multiple right now. Let me time the market, right? You're saying that doesn't always work that way.
It doesn't. And, I think, again, I've been doing this for long term, and I think you have to take a kind of a long-term perspective on it. If you hire a broker that knows what they're doing, they're going to find the best deal that's out there for you. But again, that deal's not going to be better than just keeping it for the next decade. So have that compelling reason to sell.
And we see a lot of groups, second generation, third generation, and sometimes there's not a generation after you for whatever reason to take over the business. Do you ever consult with groups who are saying, look, I'm 65 years old, been doing this 30 years. I'm tired personally. I'm sort of at this crossroads of, do I sell to a Sunbelt, or do I maybe sell it or pass it down through the family? Like, how do you think about the family transition side, right? How do you think about actually transitioning this to the second generation or the third generation? How does someone go about that process?
Well, I think, first of all, really good question. I'm a big fan of, keeping the family in the business. I personally am a shareholder in my own family seafood business. I think it's a great way to kind of keep a family bonded and together. And like I said, I think the best economic thing you can do for your family is just to keep it in the family and keep operating it. But, look, it's not so easy to do because, sometimes the second or third generation doesn't want to be in the business. They want to be a, software person like Kyle or something. Or
I'll talk them out of it.
I think, it's certainly, I work with a lot of companies that are in the second generation. I would say it's very, very rare it goes to the third generation. But I'm a big fan of, family operated businesses. I think it's, customers like dealing with family owned businesses. It's not easy. When you get to the third generation, it's very, very difficult, I would say.
Yeah, I mean, that's like the whole story. Right? Second generation sees the parent work hard and they know what it's like, and third generation missed that, right? And that's why it usually drops off third generation. However, I have seen a couple. Chad Wagner came on last week. He's third generation, 60 years old, 60-year-old business. He came on the podcast last week, and he's crushing it, right? But he bought into the company himself. And I think one of the point you mentioned earlier, right? You're obviously sort of incentivized to sell companies. That's how that's your work. But what you sort of said earlier was like, generally the best deal is actually to keep the company for another 10 years, right? Like if you actually like the work and you enjoy it and you're growing, like you don't necessarily shouldn't sell it necessarily right now. You should keep growing, pass it to the family. Only sell it once you're ready to be done with the business. Is that right?
Yeah, that's my view. I mean, look, I obviously I get paid to, sell the companies, but, like we talked about before, I've been doing this for a long time. I plan on doing this for a long time. So, good advice is the best advice. And part of being, an honest broker and having a good reputation is giving people honest advice. So I love the family business model. If you can do it, go for it. Not everybody can do it though.
Have you talked people out of selling? People come to you, hey, Dan, I'm ready to sell my business. And you start talking to them and you go, hey, you know what? I actually don't think it's best for you. And here's why. Have you had that conversation with people before?
Well, I don't know. I talk anybody out of it. I mean, I generally spend time with prospective clients up front, to gauge their valuation expectations and, just whether or not their heart's in it or something like that. Because my model's a little bit different. I don't charge retainers. I don't charge out-of-pocket expenses and that sort of thing. So to me, to take on a client, I really have to have some assurance that their expectations.
They're serious. Yeah.
You're reasonable and that they're serious sellers. So I've made some mistakes in the past, like everybody has. But I try to spend that time up front. And, we walk through, I've been doing this long enough. I can pretty much tell them what I think their company is going to sell for. I insist that they talk to their tax person to understand what the tax implications are. And we walk through other kind of parameters of what a deal will probably look like, just to make sure they understand and I can get comfortable that they're serious.
Yeah, so let's kind of walk through like what that process looks like. So, I call you, Dan, I listen to this podcast. I'm like, you know what? I actually think I am tired. I've been doing this 30 years. Don't have kids to pass it down to. I, want to retire and I want to think about selling my business. What does that process look like with you? How long does it take? Walk me through the different steps going from initial conversation with you to, popping the champagne when we sell the company. What does that journey look like?
Right. It's a long process, but it generally starts with, setting the valuation expectations. So the first thing I will do is I will, send my prospective client a non-disclosure agreement so they can have some, comfort that I'm not going to go, blab about this thing to, whoever. And I'll ask them to share some real basic financials with me, generally the last couple of years, and maybe a current fleet listing, that sort of thing. And with that information, I can pretty much tell them within a pretty tight range, I think, what the company will sell for. And, I also will, ask that they kind of walk through that with their tax person. And normally that's a conversation I get involved with to explain to them how the taxes are going to work. So I want them to get a really clear understanding of, what their net walk-away money is going to be. And then we also talk about other things like, if a buyer's going to come in, they're definitely going to want the seller to stick around for at least a year or two to facilitate the transition. So we'll talk through, what a salary might look like and what their roles and responsibilities are going to potentially be under a new ownership. And, we also talk about other things like, most of my clients own their own real estate, generally outside the company. What happens to the real estate, for example? What happens to their people? So we'll, walk through all those kind of things. Then if they're serious about moving forward, I'll send them an engagement letter. And we'll get signed up, and I'll put together a very detailed information memorandum in PowerPoint form that talks about the company and its history and its financials and its fleet and its locations and its org chart and its, all the things that are important for a buyer to consider. And it's a sales document, and I'm there to kind of sell the company, so I'm putting the best foot forward. And then I'll use that to solicit interest from, multiple buyers. I'll get them to sign a non-disclosure agreement. And then hopefully, the whole idea is create some competitive tension so that we can get my client the highest and best price.
And generally, when you're talking to prospective buyers, at the end of the day, obviously, there's only one group buying it, right? You can't have two people buying at the same time. Do you generally have multiple people looking at it, bidding on it, or is that more rare? And really, at the end of the day, there's usually only one fit. Like, how often are there multiple people looking and bidding up a company?
Yeah, it's a good question. Sometimes it's a matter of market timing and that sort of thing. Ideally, I'd love to have a scenario where I have 3 or 4 people bidding. That's pretty rare. More often than not, it's 1 or 2, and many times it's just 1. But the buyers don't know that. So part of what I do is, sometimes I, create the illusion of competition. Or, sometimes, the buyer's just competing against the seller not transacting. That often is leverage that I'll use in a situation to get the highest and best price. But at the end of the day, it's not like we're, making cookies here where we could sell it to, 1,000 different buyers. Generally, when I take on a client, I'll generally know, like there's 2 or 3 buyers here that I think would pay a kind of a market price. And so, when I market a company, I'm not going out to tens and hundreds of people. I'm going out to 3 or 4, 5, 6 different potential buyers.
And potential buyers, are they typically the nationals that we all know? United, Sunbelt, Herc, et cetera. Do you ever go to private equity groups as well, or are the regional players that would buy? Who are the buyers?
Well, the majors you just mentioned, certainly, there's not a lot of private equity in the industry. Is some.
Yeah.
There's Kinderhook, for example, backs REIC, which is Kevin Fitzgerald's company. Kevin Fitzgerald's a fantastic operator, and he's building a great business. There's a private equity firm out of Dallas called Crossplane that's backed a company called ERG, Empower Rental Group. I actually sold one of my clients to ERG. Those are, you have to pick your spots with those folks because, looking for certain types of companies. It's rare that I'm just not going to go out to every single kind of private equity group out there. I just have to, thousands of these people over the years, they just, they don't have the mindset for the industry. They don't understand the math, and it's very difficult to kind of get transactions. But for somebody that already has an investment in the industry, Kinderhook, Crossplane absolutely will show them a deal if it's a fit, obviously.
Yeah, I mean, to educate someone on the industry, that's just a whole separate topic. Like me and you know how the industry works, but the average private equity guy, it's not even worth it, right? You just focus on the people who've done this before. It's just much easier and probably better for everyone. I engage with you, right? And you're sort of starting to we signed the NDA and you're looking at my numbers. How long does it take between that first conversation and getting the prospective sales sheet effectively ready to go to market, to go talk to some of these buyers? How long does that process take?
Well, assuming the back office is in order and they can generate reports that I need, it doesn't take very long. I mean, we're talking about a 35-page PowerPoint, and I've done it many, many, many times. So, it takes me 3 weeks or so, something like that, to get that together.
So about a month, right? So within a month, right, I should know generally how much my company could sell for. I have all the numbers together. So you've got it. You're now going to talk to buyers. What's the next step? How long does that next phase take?
Well, it takes about I'd say probably a week to get the information memorandum out in the hands of the buyers. I also have them sign a non-disclosure agreement, a serious non-disclosure agreement, and I'll send the offering memorandum. Usually it goes to either the M&A groups or the regional kind of operator in charge of that region for the majors or whatever. Get it in the hands of the right person is half the battle, in some of these deals because the M&A groups are very accomplished deal people, but at the end of the day they're there to serve the operators, the people that have P&L possibilities for their region. So those people are very, very important to the process, and you have to have a relationship with those folks too. That takes a week or so to get that document, NDA signed and get that document into the hands of the right people. And then generally within, another day or two, I think you're going to know if there's interest or not, because you're going to get some questions. Hopefully, the information memorandum that I write will answer 95% of what they need to know. But there's generally always some follow-up visits. And then if there's interest from, hopefully one or two groups, what I like to do is just set up a kind of an informal meeting where the regional P&L person and or the M&A person will meet the owner offsite somewhere, have a discussion about the business and the history. And, the idea is these target acquisitions have to kind of fit the culture of the company and vice versa. So there has to be, hopefully a good meeting of the minds, meeting of culture and that sort of thing, a good fit. So I like to have these kind of informal management meetings where they'll sit down, break bread over dinner or something like that. And then it just kind of goes from there. We'll at some point I'm going to say, hey, look, if you're interested, I need you to submit a written letter of interest or a letter of intent. And we'll evaluate that. We'll use whatever tools we have to negotiate that price higher. Oftentimes there's many points of negotiation, including lease rates and salaries and that sort of thing. So it's a lot to it. There's many points of negotiation. But hopefully, you have a big cash paying strategic buyer on the hook, and that's the best case scenario.
So there's a meeting of the minds, breaking the bread, making sure there's a fit between the owner, the management team, and the buyer, which is super important. And then there's the negotiation part of this where you kind of get in the details. And, that's a lot of the value I'm sure you offer. Kind of through that, like, all right, I think we have a term sheet or we have the key points finalized. Are we popping champagne, right? Is it ready? No, I'm sure there's more steps. What's next after that? You sort of get the principal agreement. We've chosen the buyer. What's that diligence and closing process like?
Right. So, the next stage would be a due diligence phase. The majors obviously know what they're looking at. So generally the diligence is pretty straightforward. They might want to have you walk through the P&L, for example, and understand what some of the line items are. They might want to see a listing of all the employees and what their salary or commission rates are, that sort of thing. They want to see maybe some underlying contract with some service providers. Maybe a harder look at the fleet. So they'll do some basic kind of due diligence like that. At the same time, generally, they're drafting the documents, which will ultimately kind of document the deal. Generally, an asset purchase agreement, lease agreements, that sort of thing. I get intimately involved in that process as well. I'm not a lawyer, but I will either recommend a lawyer that I've done many, many transactions with or work with my client's lawyer to help them along. There's a lot of work to be done in kind of getting these legal documents together. But most of the time, it's a pretty straightforward process. I roll up my sleeves in an effort to kind of keep those legal bills down. I've been doing this so often, I kind of can save my clients a lot of legal dollars. So two major things, the due diligence part of it, and then the legal documentation part of it. We're talking about a 45, 60-day process, something like that. And then at that point, we'll set a closing date. And, generally what happens is, a couple days prior to that, the owner will make the announcement. This is after the legal documents are pretty much, 99% there. The buyer will ask the owner to make an announcement to the employees. The HR people from the buyer will come in and interview the employees and get them set up on their systems and their healthcare and their insurance and all those other things. So again, there's a lot to it. But most of the majors have been there, done that. I've been there, done it. We can help our clients kind of walk through that process.
Yeah, I mean, that's the great thing about working with someone like yourself. Like, you probably could go get some M&A specialist who doesn't know the industry. I'm sure they could technically do it. But like with you and the buyers, it's sort of almost routine in a sense. You sort of know where the buyers are buried. You know what can go wrong. You kind of you can really take the seller through this journey who probably is selling company for the only time in their life, or maybe they do a second company, right? But for the most part, this is a once in a lifetime thing that you're able to help guide them through. That's the expertise you provide. What's that final closing like? The documents are signed. That's an iconic moment for a family and an owner, I imagine. It's probably, you've done over 30 of these, so you've been lucky enough to be a part of it. What's that final celebration, that moment? It's got to be iconic, I imagine, for the owner.
It is. Boy, Kyle, that's a great question because it's a very emotional moment for clients, and I never quite know how they're going to react. Generally, they're happy, obviously, because they just see the wire come through and they have a lot of liquidity. At the time, they're kind of sad because they spent 35 years building this company and they don't control it anymore. But they could take some comfort, I think, and most of them do, in the fact that when the buyers come in, the most valuable resource is their people, right? And so the buyers come in, they very much value the people, the relationships with the owner. So they very much want and need the owner to kind of stick around to facilitate the transition for their employees and their customers. And I've had some clients that stick around and work for the buyers for, years and years and years. Others will, stick around for that, 6 months to a year and then move on and do something else. But it's a very emotional thing. And it's a part of the reason that why I love what I do is because, there's some tough moments with all my clients as they go through this process. And you have to be a good listener and you can't be a know-it-all. And you have to kind of empathize with kind of what they're going through because it's very significant, life-changing for them.
It's life-changing and maybe even, generational changing depending on the outcome for the family, right? And it's important, I mean, that you're the trusted advisor, that you walk through that with them. I have to imagine it's many different conflicting emotions when it happens, probably disorienting. And my dad didn't start this company, but he was a CEO of a landscaping company that sold to private equity a few years ago. And he was working all the way up, closed on midnight on New Year's Eve. And it was just this awesome experience. And then the next day, he didn't have a job. And he was 3 weeks in January. I remember he was like, I would put all this energy into this. I have nothing to do. And I got the check in the mail, et cetera. But he ended up going to work as at a local running store, getting whatever, $12 an hour selling running shoes, because he had to kind of go back and get out in the world. Now he's got another job. I think he found that for himself, sitting on the beach was not for him. When people transition, they sell the business and they move on. And I'm sure people go 1,000 different directions. They stay with the company. Maybe people earn out some period of time, then start another rental company. They go do something totally different. For the people who really jump forward into the next phase, like with excitement and energy, and don't feel sort of disoriented, what are some of the things that people do to really make sure that they're jumping to the next opportunity, not just sort of floundering with, a loss of purpose, which I imagine probably feels that way when you've been doing something for so long?
Yeah, I mean, I think I think they have to have an open mindset because, when a major comes in and takes over, it's not the entrepreneurial kind of company that you owned and ran. I mean, it's different now. I mean, there are processes and procedures, and there's a back office in some city far away now doing your HR stuff. And I think you just have to kind of realize that that's the reality. And I think you got to put on a brave face for your people and your customers. And but for most of my people, most of my clients, they kind of get it. They get frustrated sometimes, obviously, and some of them can't stand it at all. But if you have an open mind and you embrace the fact that change has come, and put on a brave face for your people, and I think many of my clients come to really enjoy it because they love being in the industry and they love working the equipment and their customers, but they don't have to do it on their own nickel anymore. So that the stress level is a lot less, and they enjoy it.
Yeah, and I imagine if you are an entrepreneurial person and love being your own boss and driving change and moving fast, having a big corporation now under your company is a change. Change isn't always good or bad. It just is what it is. It's part of life. I would say. I guess one more question on the we sort of skipped over this, but so on the metric side, when you're thinking about valuing the business, like what are the top 2, 3, 4 data points that you're looking at to give that valuation, right? You said like within a month, you can kind of give a pretty good range of valuation. What are the main things you're looking at?
Well, I don't have I'm not completely dialed into what the valuation metrics are for these buyers, but I do have a strong sense for kind of what the valuation drivers are. And I know just from experience what I think the companies will sell for. But it's a function of, like, for example, what are your pure rental revenues? Generally on average 2.3 times pure rental revenues, for example, is one valuation metric. EBITDA, is probably the most common, earnings before interest, taxes, depreciation, amortization. So most middle market companies are going to trade between 5 and 6.5 times EBITDA. And the last would be, just the size of your rental fleet. Original equipment cost, about 1.5 times your original equipment cost. So whether you trade for on the bottom end of that kind of spectrum or the higher end really has to do with, a lot of different things, including your growth over the last, 2-3 years, dollar utilization figures, your EBITDA margins, the size of your company. These are all things that kind of go to a valuation of the company.
Yeah, that's great. That range 5, 6.5 times EBITDA. I've heard that many times. Obviously, we talked about H&E. Above that, expensive premium, but maybe they know something we don't know.
Yeah, H&E at 7.5 times is, bigger is better, right? So bigger companies generally trade for higher multiples. But look, between 5 and 6.5, that's a big range. So, if you're running an older fleet and you're running, kind of margins that are lower than the industry average, you're gonna be at the lower end of that spectrum. If you've got high growth and relatively new fleet, high dollar utilization, high EBITDA margins, you're going to be at the higher end of that spectrum.
Yeah, for sure. Well, Dan, I think we're about out of time here. It's been awesome having you on. I guess final question: if I'm a group thinking about wanting to sell in 3 years, because not because I'm trying to time the market, but because I've had a great journey for 20, 30 years, but I want to sort of be out of the business. I'm tired. I sort of want to move on to the next journey in my life. What should I be thinking about now, knowing I want to sell in 3 years? What should I be doing now to prepare myself for that eventual sell?
Well, I think first of all, it wouldn't hurt to reach out to a broker like myself, or I have some competitors, obviously, establish a relationship there. Start walking through valuation models and that sort of thing. Start sharing with them information as you move along over the next couple of years. Start that relationship, I'd say, sooner rather than later. Then when the times comes, you'll have a good sense for who you want to go with. But obviously, if you got some older fleet and some underutilized assets, you could start maybe trimming that stuff up a little bit. If you got a back office that's not as sharp as it should be, a software system that's maybe outdated, there's always some strengths and weaknesses in every organization, and start to address some of those weaknesses head on and get some of those things kind of buttoned up. You really want to be really, really tight when you go to market. And then lastly, I would say, be prepared for an extended marketing period. Like I said, there's limited number of buyers and we're in a cyclical industry. And so I would say, if you want to be in a position where you're, cashing that check 3 years from now, I would really think about, getting a broker hired and, next year or so, and be prepared to kind of ride it out for a year or two, because it might just take that long to get a deal done.
Takes patience and some grit and rolling with the punches. It's not just to push the button and sell the company. There's a lot that goes into it. And that's why people like yourself offer a lot of value.
The best position you can be in is you're for sale, but you don't have to sell. And just wait for the right buyer at the right valuation to come along. And it usually does.
That's right. Well, Dan, thanks for coming on. It's great to connect with us, fellow Maryland resident. And I think, a lot of these rental companies we talk to, they move fast and they have great service and they work hard and they charge hard. That's what makes them great. Selling your company is a time to go slow and be thoughtful about why you're selling, going through the process. That can take a couple of years. So a lot of great advice on this call. And Dan, what's the best way to people to reach out to you, by the way, if they are thinking about selling their company? So go to the website or, connect with you on LinkedIn. What's the best way to get in contact?
Anyway, I do have a website, craftpartnersllc.com. I have a LinkedIn profile, and I have an email, dconway@craftpartnersllc. And Kyle, like every entrepreneur, my cell phone is permanently attached to my hip. The only reason I don't answer it is if I'm on the phone. If you leave a message, I will call you right back on my cell phone, and you're welcome to call it. It's 310-919-8842.
All right. Well, thank you, Dan. It's great having you on. Thanks for the time.
Thanks, Kyle.